Welcome to the channel Get Rich. Today, the company we are going to analyze is Grasim Industry. So, first, let's have a look at their business and then the financials and finally the valuation. So, let's get started. So, first, about the business of Grasim Industries. So, Grasim is India's pioneer in viscous stable fiber, a man made biodegradable fiber that is fast emerging as a sustainable alternative to cotton. A versatile fiber VSF is used in apparel, home textiles, dress materials, nightwears, and non-woven applications. Brilla cellulose range of fibers can be used in their original form or can be blended with all natural and synthetic fibers for enhanced comfort and feel. So they are the number one player in viscous stable fiber. And then they are also number one in specialty chemicals and caustic soda. They are also number one player in premium fabric segment. So this is their standalone business. They also have a lot of diversified business. So the first main one is Ultratech Cement. They have 57% stake in Ultratech Cement. So Ultratech Cement is number one cement producer in India and number three global producer excluding China. And the other big subsidiary is Aditya Birla Capital Limited. So they are top three in asset management companies and top five in private diversified NBFC. So if you have a deeper look at their all of their business, so the Grasim Industries, they have viscose business and pulp business, and they also have specialty chemicals and caustic soda and epoxy segment, and they also have other small businesses like fertilizers, insulators, textiles, solar, renewable energy, and premium fabric. And also they have overseas joint ventures for pulp and viscous stable fiber. So you have a number of joint ventures and the largest subsidiary Ultratech Cement. They also engage in grey cement and white cement operations. And then Aditya Birla Capital Limited. They are operating in NBFC, housing finance, life insurance, AMC business, health insurance, broking, insurance advisory, private equity, online money management. They have a lot of financial service business. Then, if you look at where they are present in a dress segment, they are present in manufacturing of glass from their specialty chemicals, and they are involved in construction sector because they are the number one manufacturer in cement, and they are also have financial services sector. If you have a look at their brands in the cement sector, they have Ultratech. In the textile, they have Liva and Linen Club, and in the chemical side, they have Aqua, Mer, Twist, Vital and Razel, and also they have Aditya Birla Capital. These are their main brands of Grasim Industries. And then if you have a look at their revenues, where are their revenues coming from which segment? So the cement business contributes around 51% of their revenue, financial services contributes 21%, and viscose accounts for 14%, chemicals 9%, and other small businesses contribute around 5%. If you look at their EBITDA side, 56% of their EBITDA comes from cement, 8% comes from financial services, and 16% from viscose business, 14% from chemicals, and 6% from other smaller segments. Okay, first let's have a look at their viscose business. They are the number one viscose stable fiber producer in India and have been manufacturing the world-class viscose stable fiber for more than 7 decades across 4 plant locations. So I briefly mentioned what is viscose stable fiber. So it is a regenerated cellulose fiber made from wood pulp, a sustainable natural resource and is biodegradable and eco-friendly. Their viscose enriches every garment with fluidity, luster, softness, drape and comfort. So the demand of viscose stable fiber in India witnessed a double-digit growth for the second consecutive year. It registered double-digit domestic sales volume growth of around 22% year-over-year. They played a major role in moving up the VSF share in the overall fiber market share from 3.5% to 5% in last 4 years. Grasim has been at the forefront of driving the VSF consumption in India with the launch of Liva brand in 2014. In financial 19, the company introduced Liva Echo and Liva Home as an extension of the brand Liva. Having served the women's apparel segment, fiber brand Liva extended co-branding into home textile space furnishing, bed linen and carpets. VSF demand in India is expected to maintain its growth momentum and witness a high single-digit growth for the next 2 to 3 years. Also, they are also a manufacturer of viscose filament yarn. So they are the largest producer of viscose filament yarn in India. So their brand Resil is the versatile fashion yarn manufactured from premium and imported wood pulp. So it's available in over 600 states and they are also used in variety of applications. So let's have a look at their revenue segment. So their net revenue from Viscose in financial 2017, it's around 7,100 crores and it reached 10,300 crores in financial 2019. And if you look at the EBITDA in 2017, it's 1,439 crores and financial 2019, it's 2,052 crores. If you look at the quarter over quarter, in quarter 3 financial 19, it's 2,615, quarter 2 financial 2020, it's 2,430, quarter 3 financial 20, it's 2,194. If you look at the EBITDA side, it reduced from 477 crores in quarter 3 financial 19 to 381 crores in quarter 2 financial 20 and 256 crore in quarter 3 financial 20. It means their EBITDA margin are coming down, because if you see at the sales volume, it maintained at 134 kiloton, 142 and 138, but then the EBITDA is coming down. Problem is their profitability coming down, their pricing of the viscose is also coming down. Let's have a look at them in a minute. If you look at their sales volume mix, so 86% of their sales are domestic sales, 14% are they are exporting, and if you also look at their mix of the product, 78% they are selling it as gray VSF, and they also do 22% of value added products. If you look at the global price trend of viscose, so the gray VSF year over year the price reduced 27%, quarter over quarter 9%. At the same time, cotton minus 14%, quarter over quarter 3%. The price of viscose is coming down for many quarters, and it's coming down and down and down. And they said they are already at the bottom most part. And the reason being said is the capacity addition of 1.3 million tons in last 1 year in Asia, muted demand due to weak macroeconomic conditions, US China trade war, and sharp depreciation have impacted global prices. The inventory level has gone up despite operating rate coming down from 90% to 75%. Gray VSF prices drifted to near variable costs towards end of quarter 3 financial 20, indicating expected future support. So they are expecting it to be bottoming out, and they hope it is going up, but it's also a bigger risk because it's coming down and down and down for many quarters, and their profitability is impacting a lot. If we have a look at their capacity, so in financial 2019, they have a capacity of 549 KTPA, and then in financial 2020, it's increasing a bit, and then in financial 2021, it's going to increase to 738. So because the capacity expansion at Vilayat plant is progressing well, let's have a look at their chemical business. The domestic consumption of caustic soda is expected to increase by 2 to 3% over the medium term on account of a strong demand from key consuming sectors such as textile, alumina, pulp and paper and chemical industries. Globally, caustic soda prices have been bearish for last 6 quarters because of lowering demand in Asia. So new caustic capacity addition and increase in imports are resulting in decline in domestic caustic prices in line with international prices, because caustic soda is their single most biggest business, and they are also doing some other specialty chemicals and also epoxy, but the caustic soda prices remains a bigger concern for them. The chemical business, if you look at the revenues, so it increased from 3,800 crores from financial 2017 to 6,400 crores in financial 2019. If you look at the EBITDA in 2017, it's 842 crores, 2019 it's around 1,827 crores. And if you also look at the net revenue, came down a bit low, but then relatively okay. So from 1,559 crores to 1,362 crores in the last quarter. And if you look at the EBITDA, 441 crores to just 185 crores. That's a bigger concern because it's also a price erosion and also the profitability decreasing. If you have a look at their sales are doing good. So 250 kiloton to 241 and 261. But then the price of caustic soda is the bigger concern for them, because the Grasim, if you look at the Grasim realization of caustic soda rupees in ton, so it's in 31,310 in quarter 2 financial 18, it went up to 40,000 in quarter 1 financial 19, it again came down to 27,800 in quarter 3 financial 20. So the prices are a bit fluctuating. That's also some of the risk involving with the company. They are a standalone business, they are having a lot of price variations, so that's also one of the risk we have to consider. So in the caustic soda side, the company sales surpassed the 1 million ton mark in financial 2019, first in the country by any company. The business is in a transformational stage and they have a razor sharp focus on expanding their share of value added products in the overall portfolio. In financial 2019, they have launched new value-added products to cater to the needs of the food, plasticizer, sanitizer, and water treatment business segments. They have several brands in selling chemicals to water treatment business segments. So they're the largest caustic soda producers in India with significant integration and a capacity of 1,147 kiloton per annum. So their largest end consumers are alumina, textiles, and others. They are also making investments in expanding production of chlorine value-added products. Chlorine, a chemical produced as a byproduct during production of caustic soda. This will drive the overall growth of their business. Also, they have other segment called epoxy. They are one of the leading epoxy resin manufacturers globally. Epoxy resin is a versatile product which finds its application across industries like automobile, construction, heavy engineering, transport, electronics, food and beverages, packaging, and coatings. Let's have a look at their textile business. Grasim's textile business has linen and wool as the popular product lines. So their business for financial 2018-19 reported a revenue of 1,500 crores and EBITDA of 139 crores. So their linen business maintained its leadership in the linen market with 45% market share in linen fabric and 45% in linen yarn. So the retail arm of the business under the brand Linen Club is one of the largest single brand franchise network in India. It added 28 new Linen Club EBOs during financial 2018-19 with a total of 200 exclusive brand outlets. So besides fabrics, Linen Club stores also offer a wide range of linen apparel. Further, during the year, linen business ventured into intimate blend fabrics and apparels by launching two new brands, Missouri and Cavallo respectively. Cavallo is supplied through e-commerce channels. So their wool operation has integrated combing and spinning facilities. They export to over 30 countries with a wide product basket and good share of value-added products. They continue to be the market leaders in domestic wool combing market with 40% capacity market share. So they also did an acquisition of 100% equity of Sockstas India Private Limited for 135 crores. It is aimed to expand their leadership in the premium fabric segment. So they also renamed that as Grasim Premium Fabric Private Limited. So Grasim has brand rights for the Socktas, Giza House, and Excellence by Socktas brands in key territories including India, Bangladesh, and Nepal. If you have a look at their main brand, Liva Garments, so in spring summer 16 it's 7 million and it increased to 22.6 million in spring summer 2019. In 3 years they have a tremendous increase. They are also operating in linen business, so in bedding, home. So then their next biggest business, cement business. Let's have a look at their cement business. So Ultratech is their subsidiary. So they own 57% of Ultratech Cement. So Ultratech Cement is today the third largest cement company in the world, excluding China, with a consolidated capacity of 102.75 million tons per annum of grey cement, including 4 million tons per annum under commissioning, and the largest manufacturer of grey cement, ready mix concrete, and white cement in India. Ultratech is India's #1 cement and concrete brand. Ultratech has an operational presence in 5 countries: India, UAE, Bahrain, Bangladesh, and Sri Lanka. In India, Ultratech distribution network comprises a network of 49 cement plants, over 100 ready-mix concrete plants, more than 650 warehouses, and more than 200 railheads. Ultratech services 20,000 orders of different order sizes on a daily basis through a mix of logistical modes comprising rail, road, and sea. So if you look at their revenues in financial 2017, they made 25,375 crores. In financial 2019, it's 37,379 crores. If you look at the EBITDA in financial 2017, it's 5,861 crores. In financial 2019, it's 7,226 crores. If you have a look at their sales volume, so they did 21.76 in quarter 3 financial 19 and quarter 3 financial 20 it's 20.90. So the net revenue decreased a bit from 10,400 crores to 10,350 crores, but then the EBITDA increased from 1,700 crores to 2,140 crores. Then let's have a look at their financial services business. So Aditya Birla Capital Limited, it's also their subsidiary. They own 57% stake in Aditya Birla Capital Limited. Aditya Birla Capital Limited is a holding company of all the financial service businesses. Aditya Birla Capital has a strong presence across a wide range of protecting, investing, and financial solutions, which include life insurance, health insurance, motor insurance, corporate general insurance, mutual funds, wealth management, stocks and securities broking, portfolio management services, real estate investments, pension funds, home finance, personal finance, SME finance, real estate finance, loans against securities, corporate finance, debt capital markets, loan syndication, and asset reconsideration. So Aditya Birla reported a strong financial performance. So if you look at their net revenues in financial 2018, it's 9,083 crores. In financial 2019, it's 15,000 crores. Their EBITDA increased from 756 crores in financial 2018 to 1060 crores in financial 2019. So their financial service businesses is doing very well. I am very bullish on their financial services business compared to their other businesses. Also, the cement business is doing well. This business is going to do pretty well because they are involved in AMC business, insurance business. That's very good in the next coming decades. So then if you have a look at their lending book, they have 60,000 crores in quarter 3 financial 19. In quarter 3 financial 20, it's around 60,000 crores. It's same, remain the same. Also, if you look at the asset under management, it increased from 2,58,833 crores to 2,65,475 crores. That's a very good thing for the company. If you have a look at their several businesses, so their premium is around 8,000 crores, and then in AUM we just saw that it's 2,65,000 crores, and their lending book is 63,120 crores. So if you also have a look at their equity mix, so they have 36% of equity from their asset under management in financial 2019 from 24% in financial 2018. It's a very good increase. They increased from 24% equity to 36% equity. In the life insurance business, the individual first year premium are up 14% to 1,261 crores in 9-month financial 20. In the health insurance business, gross written premium increased to 546 crores 9-month financial 20, up 73% year over year, with retail mix at 71%. This is 60% in previous year. They are doing pretty well in their financial businesses like insurance business or asset management business. They are doing pretty good. And then they also have some joint ventures. So if you look at the net revenues from joint ventures, in quarter 3 financial 19 it's 1,224 crores, in quarter 2 financial 20 it's 1,283 crores, in quarter 3 financial 20 it's 1,081 crores. If you look at the EBITDA, it's 74 crores in quarter 3 financial 19, 121 crores in quarter 2 financial 20, and they have a loss in quarter 3 financial year 20 because of their sales coming down. I think they are reporting a loss from the EBITDA. That's not a good thing. Then if you look at their pulp and fiber price, so the price is coming down. That's what is hitting them. So their pulp price is also volatile, and then the price is dropping now. So it's a very bad thing for the company. On the contrary side, if you look at their raw material cost, it's also coming down. That's some relief. If you have a look at their other business like fertilizers, textiles and insulators, so from their fertilizer business, they have 868 crores in quarter 3 financial 2019. In quarter 2 financial 20, it's 721 crores. In quarter 3 financial 20, it's 638 crores. And then their EBITDA is from 81 crores, it reduced to 30 crores. And then in textile business, so they have net revenue of 394 crores in quarter 3 financial 19. In quarter 3 financial 20, it's around 400 crores, but then the EBITDA is reduced from 57 crores to negative to EBITDA. And insulator business, 101 crores in quarter 3 financial 19, 90 crores in quarter 3 financial 20, it remained the same, the EBITDA 3 crores to 3 crores. So these are all their other small businesses. And they also have a business with Aditya Birla Renewables, like for solar power. They also have Grasim Premium Fabrics Private Limited. So these are all small businesses compared to their main business. If you look at their capex plan, they did a capex of 2,092 crores in financial 19. In financial 20, it's expected to be 3,134 crores. In financial 21, they are expecting 3,320 crores. If you look at the detailed breakdown, so their capital expenditure for capacity expansion for viscous stable fiber, it's they spent almost 1,124 crores year to date in December 2019. So they are expecting from financial 21 onwards, it's around 1,723 crores. In total, the capital expenditure for capacity expansion is going to be 2,795 crores from financial 21 onwards. Normal modernization and maintenance capex is 1,544 crores from financial 21 onwards, and capex related to their other business remain to be 227 crores. So in total, they are projecting 4,566 crores from financial 21 onwards. If you have a look at the income statement, so the total standalone from financial 2017 is 10,300 crores. In financial 2019, it's 20,550 crores. The EBITDA increased from 2,629 crores to 4,639 crores. The profit before tax, it's increased from 2,125 crores to 3,680 crores. The consolidated revenue increased from 36,068 crores to 72,971 crores. The EBITDA, it's 8,333 crores in financial 2017 to 12,820 crores in financial 2019. Profit before tax increased from 5,823 crores to 7,779 crores. So if you look at the performance between 2015 to 2019, their revenue increased by 2.2 times, and then their EBITDA increased by 2.3 times. If you look at their return on equity, 10 years average is 9.35, 5 years 7.13, 3 years 6.93, last year it's 5.39. So the return on equity is not that good. I like businesses with more than 15% return on equity. So then we just saw their consolidated and standalone net revenues and EBITDA. But if you look at their EBITDA margin, so in Q3 financial year 2019, their consolidated EBITDA margin is remained at 16%, and then Q2 financial 20 is 17%, and then Q3 financial 20 it's around 15%. If you look at the standalone business, their EBITDA margin decreased from 21% to 19%, so to just 11%. So that's not a good sign, because of they have a lot of price volatility they are facing. So that's a big negative for the company. If you have a look at their balance sheet, so from total assets 20,854 crores in March 2018 to 2,29,156 crores in March 2019. So they increased their assets pretty huge. And then the reserves, it increased from 9,000 crores to 55,639 crores. And also borrowings, it's 81,900 crores, because they also have a financial services business, so they have a lending business. And then if you look at the net debt to EBITDA, standalone they have a net debt to EBITDA of 0.82 times, and consolidated they have a net debt of 1.56 times, including their financial services business. If we have a look at the shareholding pattern of the company, so the promoter shareholding increased marginally. So the promoter shareholding remains at 40.26%, and mutual fund holds around 9.65%, FIIs 13.52%, other institutions 13.21%, and 23% is available for the public. If you look at the total holding of FII plus DII, it remained about the same until December 2019, and March 2020 they decreased their shareholding a bit. Yeah, that's a bit on the negative side, but then not a lot, so that's still okay. So then let's have a look into their valuation. So first let's value their subsidiaries, because they have a lot of businesses and they have a very big subsidiaries. So let's first value their subsidiaries and then value their standalone business, and then have a look at their consolidated valuation. So let's looking at Ultratech Cement. They hold 57% stake. So the current valuation, since it's a listed company, the current valuation is 64,241 crores. So I'm expecting in 1 year it's going to reach 70,665, 2 years 77,732, 3 years 85,500. So if you look at the Aditya Birla Capital Limited, 57% stake they are holding, and the current value responsible for their 57% is 6,300 crores. In 1 year 7,570 crores, 2 year 9,000 crores, 3 year 10,900 crores. I am expecting their financial services business is going to do well than their other businesses. And then here I come to some worrisome business. So they have a 11.55% stake in Vodafone Idea. You know, this telecom company has to pay a lot of debt to the government, and they are reporting a lot of huge losses, and they still have a negative book value. So because they paid a lot of huge dues, and they are reporting a lot of losses. It is consistently they are losing their value. So that's a negative side for the company, because the Grasim Industries was having a huge fall from January this year. So part of the reason being Vodafone Idea, they have a stake in Vodafone Idea. Maybe they have to put some money for Vodafone Idea. The book value they have mentioned in their book for Vodafone Idea is 7,000 crores. So maybe they have to write off the whole 7,000 crores for Vodafone Idea, or they have to inject some money into Vodafone Idea. So I feel this is a bit on the negative side. I don't like investment in this company. So recently there is a talk about Google investing in Vodafone Idea. So maybe that's spark quite rise, but then we have to see. So there is an inherent risk involved with this stake. So moving to Hindalco, they have 3.92% stake. So at the current valuation, they have 1,220 crores. In 1 year, 1,345 crores, 2 year, 1,480 crores, 3 year, 1,627 crores. They also have a 11.29% stake in Aditya Birla Fashion and Retail Limited. It's also a listed company. So with the current valuation, 1,048 crores, 1 year, 1,174 crores, 2 years, 1,315 crores, 3 years, 1,446 crores. So in total, their subsidiary valuation comes out about to be 74,994 crores. The current value, 1 year, 82,900 crores, 2 year 91,780 crores. In 3 years it's almost 1 lakh crore. Yeah, we have a huge holding company discount. Many analysts put 60% as holding company discount, but then I see the long term average is about to be 46%. So I am on bit on the optimistic side. The current valuation comes out to be 40,490 crores, 1 year 44,780 crores, 2 year 49,560 crores, 3 year 54,890 crores. So the subsidiary valuation per share comes about to be 615 rupees, the current price, 681 1 year, 753 2 year, 835 for 3 year. And then if you look at their valuation, Grasim as a standalone company, so with a PE of 10, for 1 year is 207 rupees, 2 years 228 rupees, 3 years 250 rupees. With the market cap for Grasim standalone is 13,600 for 1 year, 15,000 for 2 years, 16,500 for 3 years. Then if you are having a look at their consolidated valuation, so the price target comes about to be for 1 year 888 rupees, 2 year 980 rupees, 3 year 1085 rupees, with the price cumulative growth of 51% for 1 year, 67% for 2 year, 84% for 3 year. As I mentioned, I am leaning on the optimistic side because the holding company average I reduced it to 46% instead of 60%. So with that being said, I don't recommend new investment in this company because a lot of inherent risk in this company. The main thing being their standalone business, they are having a lot of price fluctuations, and for the past several quarters their price for viscous and chemical side is coming down. This affects their EBITDA margin, and that's a main big risk. And also their investments in Vodafone Idea, so we don't know what will happen in with that company because they are reporting huge losses, or they have to write off their 7,000 crores which is on their book. So this is also a risk which is coming in. If you are already holding this share, you can continue to hold because the brand is good, the financial services business is going to do very well compared to their other business. But then I won't recommend to invest fresh investment in these companies because their return on equity is also pretty on the lower side. This is my personal opinion, so do your due diligence before investing in any asset. So thank you for watching. Have a nice day. If you like my video, like, share and comment. So if you want me to analyze any other company, comment that in this video. Thank you. Bye.